Hi, this is Andy Rowe on trendfollower.co.uk. It's Saturday the 10th of December 2016 and I'm going to have a look at my weekly asset class portfolio and see if there's anything that I need to do in this coming week. But first of all, let me just remind you, of course, I'm not a financial advisor. You know, this video is just about what I do. Please don't take it as financial advice. It's just about what I'm doing. So the plan, just very briefly to recap, is that I divide the pot into 5 different slices: shares, property, gold, commodities and bonds. And what I'm interested in is being in those asset classes if they are above the average price over the past year. So I use this green line, which is the moving average for the past 52 weeks, which is a year, of course. When the price closes at the end of the week above the 52 MA, then I am fully invested in that asset class and I'll stay invested until the price closes below the MA 52, at which case I liquidate the investment, turn it into cash and stay in cash until such time as it pops up above the 52 MA again. So sounds nice and simple. It's not always that simple, of course, because it works well when asset prices trend, but when they don't trend and they chop around, then it can be a nasty experience, as you'll find out. Okay, let's look at shares, and what I do is use a unit trust, the Fundsmith unit trust, to have exposure to shares. It's a very popular unit trust at the moment, and you can look it up in your own time. But let's have a look at the graph here. This is a graph of the closing price at the end of each week over the past 5 years, and you can see that it's nicely above the green line, which is the average for the year, and so I'm happy to stay invested in Fundsmith. So nothing for me to do with that portion of my investment portfolio. Let's look at property now, and I use the TR Property Investment Trust to have exposure to property. This has both UK and continental Europe property, so it's a big investment trust. Is listed in the FTSE 350, so it's a big company, and at the moment the price is below the average for the year. It's been chopping around quite a lot over this past year. It's been rather difficult to trade because it's not trending, and that's what my system is all about. I like to pick up trends. If I'd been invested in TRY back here, this would have done very nicely. I'd have exited and re-entered here and made profit when it closed here, but over the past few months it's done badly. During 2016 I've lost money trading TRY using my trend trading techniques because it hasn't been trending. So at the moment that's in cash, and so I'm hoping that the price will continue to go down and I can re-enter at a lower price and make money later on. Let's have a look at gold now. I don't use the average for the past 1 year. I use the average for the past 2 years, and I'm tracking here an ETF SGBS Physical Swiss Gold, and it's the 104 moving average. This is a red line now just to show it's different. So this is the average price for the past 2 years, because gold's quite spiky, and using the price for the past 1 year tends to chop in and out of the market too much. So gold's been doing very well this year until it came back down again, and so I had to signal to exit gold, and so my portion of the portfolio that would be in gold is currently in cash, and I'll wait till the price goes up above the 104 MA before I re-enter my gold position. So that's it. Commodities. Now I use the City Natural Resources High Yield Trust to get exposure to commodities, and again this is a graph for the past 5 years. Commodities have been doing very badly, but in 2016 they've been doing very well, and you can see that the price is nicely above the 52 MA, so I'm very happy to be full in on commodities, and that's the way I'm staying this week. The price of CYN rose very slightly this week compared to the end of last week, which is great. Okay, bonds, and I don't trade bonds because they chop about their moving average quite a lot, so all I do is have 3 different bond ETFs, one denominated in British pounds, one denominated in euros, and one denominated in US dollars, and they're all iShares ETFs that have a mixture of different bonds in them, and so I just hold them and don't do anything with them because they're very difficult to trade. So that's it. What have I got to do this week? Well, nothing at all really. I'm staying invested in shares. I'm not investing in property at the moment. That's in cash. My gold position is in cash, and commodities. Again, I'm fully invested in commodities. So that's it, nothing to do. So I'll do another video for you next week. So hope you enjoyed that, and catch up with you next week. So thanks for watching. Do have a look at my website and subscribe to my YouTube channel. So thanks again. Bye for now.